Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways action on the Bitcoin chart as we do have consolidation mode going on. We can see on the crypto bubbles over here that there is a lot of profit taking going on. The market is front running potentially a downwards move. Just a mixed kind of attitudes there as we do see many of them just pumping off over there as well. So, guys, without further ado, let's go to the charts. I did want to point out that on the Bitcoin chart, we are closing in 31 minutes. So if you catch this video, you're probably in good shape for understanding the lines I'm about to show you. And that, of course, is the 4-hour volatility and momentum play. So if we do take a look at our, momentum on the 4-hour, we can see that we have to hold this current level of 22,667. Losing that level will clearly put us in danger of an EMA squeeze to the downside. Now, we did momentarily lose that, where we did have this wick all the way down to the 21 EMA. And we did recover that nicely. There was a ton of buy pressure that pushed us back up. However, tagging these levels sometimes implies that we're going to fill them out later on. So I would keep my eye keenly on 22,668. Now we are at 22,680 right now, just some $10 away approximately. So this is very much a potential for us to just kind of meander sideways under that level and then get ourselves accidentally into a 921 squeeze to the downside, which could take us to 22,000. It could take us all the way down to some levels to fill these naked candles here or even below that, right? Okay, guys, like we have a lot of candles that we didn't really fill too efficiently on our way up, as this has been a continuous push. But if we do want to acquire some momentum to the upside, that key threshold is going to be 22,937. If we can close in the next half an hour above 22,937, then I'm going to have a much more rosier picture. We will have recaptured essentially the 4 EMA, this pink line that I have over here, and that would suggest that we're probably going to squeeze between the 4 and the 9 to the upside, which is the beauty of using this momentum system plus EMAs. I can really visualize what's going on here. Guys, don't fade the EMAs. They are a powerful tool, and they can be used for projecting moves. Even if if you look at one candle, they are technically a lagging indicator. By just eyeballing the direction of them and using some other confluence, then you can get a projection of how price action would go. Now, your indicators probably are going to flip back to being bullish on the 4-hour around 23,040. There might be some kind of bearish indication right now because of how close we are to this momentum, line right here, this critical level. Not really sure. Most indicators have a different kind of setting, so really is hit or miss. But for just general continuation in agreement with most of your indicators above 23,000, if you want a little bit more confidence, and then of course, to gain that volatility pivot, where if we do have a volatility spike on the charts, then 23,140 is the level that you want to capture. And honestly, for my style of trading, I like to be super confident, so I like to be above the volatility pivot and above the alpha momentum pool, essentially. So whenever I'm above those two things, usually I'm confident enough to take a line along. If I'm underneath those two things, usually I'm looking for a potential drop in the market. Okay. So right now we are closer to the bottom than the top, and we will find out in approximately 28 minutes. If we do just take a look at the volatility for the 4-hour, we can see that whatever is causing us to go sideways, it really hasn't completed yet. So this thing could stretch out, and I'm really waiting for it to pinch. Now, this thing could just expand to the downside, suggesting that we could have a deeper pullback, or that we could just go sideways for a longer period of time. So I'm not highly confident that we're able to get that up move. There just doesn't seem to be anything in volatility that would suggest a sudden flip around. But should volatility just kind of curve up here and pinch close with this EMA on the actual volatility ribbon itself, then then that might suggest a change in the characteristic of the chart, and then perhaps in 4 hours or so, maybe we could flip to the upside. But right now, it's expanding to the downside. Volatility is contracting as price action is headed downwards, and so that does suggest to me consolidation sideways or down. But that's just a concept. It doesn't have to actually happen. As you can see, price action is really trying to hold on to my alpha momentum hold level here, where we're just going to hold our basic momentum. So if we can do that, let me just zoom in here so that you can see what I'm talking about. You see that kind of gap right here between this pink line and this red line. As we fill that gap or keep our price action wedged between them, then we do have the possibility, remote as it is, to just kind of bend these things to the upside, and then that could end up being what takes us home to the bullish conditions. That's why losing this level is so critical. Guys, there is a method behind this madness. I can control these EMAs knowing my levels. I can control my emotions knowing these levels. And if we, if we pass this 22,937 in the next 25 minutes, then we will have bent the 4 EMA enough that it could scoop us up, okay, at least perhaps to this 23,000. And if we get over there, then we're talking about potentially that volatility pinching shut, which I was just showing you on the indicator over there. But that is a lot of work, and this is more in danger of being lost right now than it is of being saved. You can see price action is not above even the EMA ribbon here, although it's really giving a noble effort. Okay, and by the way, we shouldn't just front run this, because you do see how this wick right here was just bought up. Okay, so bulls are definitely still there. Bulls are still accumulating and trying to do this. Somebody really wants Bitcoin at these prices even, and so this may be a little bit of a battle. So basically sideways and down, basically sideways as long as we're inside of the alpha momentum pool, which we currently are. Basically sideways is my bias inside of the alpha momentum pool. Underneath it, sideways and down, and then above it, most likely another push to the upside, perhaps even to, some of these daily EMAs that we have up here. I'll get to that in a second. Let's jump over to the 12-hour, because the 12-hour will be closing in the next 4-hour period. So basically, that's your heads up on the next 25 minutes, should you see this video right now. But just barring that, let's go ahead and jump over to the 12-hour. And the 12-hour is a pretty similar story, except that you can see that we are currently under the 12-hour momentum. So that 4-hour is really going to be critical in order to give the 12-hour its best shot here. And again, the 12-hour is going to need 22,715 for us to get back into the alpha momentum pool, which just would imply sideways action. Okay, in order to really get that momentum to give us a pop, we'd want to be above 22,901, pretty much in the same area. Your indicators are going to start showing confidence again, and then but I really don't become a bullish on the 12-hour unless we're above 23,075, let's just say. Okay, so 23,075, basically taking out this wick over here, then I would think that at least on the 12-hour time frame, that we would have a chance to continue to the upside. But currently we are just struggling with the 12-hour momentum to the downside, just like we're doing on the 4-hour. Okay, guys. But you can see that the 12-hour closes in 4.5 hours. So essentially, you do have a second chance, even if the 4-hour fails. The 12-hour can be your next possible play using these levels. Okay, guys. Let's just take a look really quickly at the volatility for the 12-hour, and here you can see that the volatility for the 12-hour is actually expanding as we've been driving sideways and down. So this one could easily flip, and then consolidation mode could go to the upside, suggesting that that could be a final move, right? Like a one last push to the upside based upon this 12-hour indication, should this pinch shut and we still continue to the upside. So we're going to monitor this. The 4-hour and the 12-hour seem to be relatively on the same page, but the 12-hour is indicating that there is some type of a push to the upside coming to a close, whereas the 4-hour really isn't committed to that yet. Let's go ahead and flip over to the daily. On the daily, we're going to probably get a bigger picture on this because we do have just a lot more, a lot more riding on this system, basically being above the 200 EMA here at approximately 21,000. You can see that we can pull back all the way to the 21,000 mark and still be above that that 200 daily EMA, which is pretty important and very difficult to get above. Ideally, we would like to not reduce further than half of this candle, somewhere around 21,780. I would still feel relatively bullish and confident with. Either way, these are going to be higher lows. This is just an incredibly bullish structure. But the daily is giving us a little bit more interesting picture in that it does give us a lot more room to work with. Although we will, of course, lose our current momentum at that 22,715 level. That's been pretty consistent around the 4-hour, the 12-hour, and also here on the daily, which closes in 16 hours. We are holding above it, so we are well above the 4 EMA here. We're not in danger of losing the 9 or anything like that. Maybe we could get a flash wick down there or something, and that would be totally healthy as long as we got back above these levels. General continuation, these indicators are still going to be relatively bullish above 22,295. We're going to lose our momentum, and that would suggest to me that we're probably going to tag the 9 EMA should we fall below 22,351. Our daily volatility is good and pointing in the upwards direction as long as we're above 22,386, which we are above that, okay? And again, like as long as we don't lose 22,715, I can't be anything but bullish. I mean, what we could do essentially is, we could even flash wick in here and just push off, like maybe the 4-hour or the 12-hour wants to check back or do something like that. We could even take a couple days and just like do something like this, fill in some inefficiency here and then continue. But guys, right now I just can't be bearish on the daily. We are, essentially doing what we need to do. It's just I do see that drag in the charts on the 4-hour and potentially on the 12-hour, which could endanger these higher time frames. Now, none of the other time frames above us are closing today, so I'm not going to cover those. But I think I did want to just go over, essentially, should we have another push to the upside, what would we be looking for? Well, on the weekly, we do have our 200 EMA, right, as well as the convergence of these 50 EMAs right above our head around 25,000. So as I've been saying from the start of this move, that 25,000 is likely to be our limitation. I would pretty much assume that it would be very, very difficult to get past 28,000, and then this 35 EMA on the weekly here around 23,000 was just a natural target once we entered this squeeze. And so we have reached my first target. My second target would be that 25, and then I'm going to be very conservative around 30,000. Do I think this could push more should we breach this 200 EMA? That is quite possible. And the reason why I have this line right here is because what I'm looking for is essentially for us to put in some type of head and shoulders structure where should we have a pullback, which is very possible with the Jerome Powell meetings and all of that coming up, then we could perhaps even make one of these kind of slanting inverted head and shoulders, and this would inevitably have a measured move all the way up to 30,000, which would give us a nice squeeze. Look at how this area of this right shoulder fills out the EMAs, and on the weekly, that could give us a squeeze through the 200, between the 9 and the 200, which is usually a powerful squeeze, and that could take us to that 89 EMA. That could take us to that $30,000 area, if not more, right? So, guys, we are going to be looking out for that. Sometimes pullbacks aren't a bad thing, right? Sometimes pullbacks actually give you that higher low, which allows the market to refuel and get that energy needed for the next push up, so we can have a similar push to this, to the upside. No guarantees of that. I'm not promising it. I'm not calling it. I'm just making a projection. I'm making a hypothesis based upon our current conditions, which we don't have a validation of a shoulder yet, and we don't have a confirmation of closing above a neckline either. But yeah, any retracement and then a recovery back to 23,000, or basically our current price, would constitute some type of a validation of the concept in my mind. And then should we get above this diagonal here at 24,300 with any type of pullback and then kind of scooping back up, I will assume that that's confirmed, because essentially what we'll have done is we'll have a higher low, a higher high, another higher low, and that again would be a higher high, and that would suggest continuation to the upside, and we have a measured move up to that 30,000. That's where I'm getting my confidence from, Alpha Fam, using just informed theories, and then looking at the price action conditions, trying to find validation points, and then of course confirmations to take the trade. Let's see. I'm going to put on my more complex EMAs that are kind of scary, just to get a bigger view on this market. I do want to see what's going on here. And so you can see that we do have the 200s crossing here. Whenever you have major EMAs crossing, we tend to have little pullbacks, okay? So I can see a little bit of a cross here. That is a potential for a pullback. You see where these ones crossed, we had a kind of little dump right here. These ones are going to be crossing up here pretty soon. So this week could be a little bit treacherous for crosses. I do see a lot of EMAs trying to converge in certain areas, and so this does make it more treacherous for some pullbacks. Now we do have the 300 EMA giving us a little bit of support here around our 4 EMA on the weekly, so that's nice. If we go to the daily, let's just see if we can see anything. Oh yeah, look at this. Yeah, we have the 300 SMA and the 300 EMA converging above our head right at this peak essentially, and so that itself could be what's initiating this pullback. Again, even bullish crosses tend to result in pullbacks, as EMA traders are taking profit at these certain key levels, and at the confusion that some of these crosses may form. You can see where the 200s crossed over here. We actually got a pump and then a massive dump. So, right at this cross. Again, guys, like these crossings, just they tend to have a little bit of chaos in the market. That's why we look for those golden crosses. We look for those death crosses. I don't usually label them as such, but sometimes it's true, right? Let's go ahead and look at the 4 hour to see if we have any sort of complexity going on there. And nope, we're just we're just riding above our EMAs quite bullishly. 12 hour, again, just riding bullishly. 12 hour has some limitation in that 26,000 area with that 800 EMA that some of these shorter time frame traders tend to take, but nevertheless they may see that 12 hours not that popular, so maybe not that important. I think we could check the 1 hour just to see how we're doing, and the 1 hour is riding off that 800 pretty nicely, so the short-term traders probably are pleased as punch. Guys, what I did want to show you, however, is a pretty interesting one on the monthly. Of course, we did essentially tap our monthly levels over here. And what you can see is that we're getting an alpha 9 knockout, where we have the 9, simple moving average, and the 9, basically I use the 10 simple moving average and the 9 EMA. exponential moving average, and they did just cross where we tapped, which happens to be the candle close high of these previous months over here. And so that area is probably going to be difficult to overcome. Usually an alpha 9 knockout is, as it sounds like, it tends to pull us backwards. And so can these other EMAs, which are starting to kind of scoop up, hold us up? Or is that Alpha 9 knockout going to have us have a pullback, perhaps to, maybe even to 20,000, 19 to 20,000, where this 9 EMA is, effectively giving our first check back to the 4 EMA on this 9-4 squeeze to the upside. That would not be bearish. That would still be a higher low, and it would check the top of these monthly candles over here, and so there would be nothing wrong with that. But I'm just saying we do have an alpha 9, knockout kind of conditions right here, which of course is my trademark move. And I do find these things to be pretty tradable. And so that rejection here was very predictable from my perspective at 23,000. You guys will remember I was calling for 23,000 for several episodes. It's just because in your mind's eye you can kind of see where these things are going to converge, and you can see we're having a lot of resistance there. But that also lines up with the previous monthly close high, and so again, like just many different types of traders may be a little bit reluctant in this area, and we may need a little bit of a check back just to have some confidence on this 20,000, 21,000, maybe even the 19,000 level before we go forward. But that remains to be seen. Okay, the fact is we did lose 23,500, and we're now around 22,000, 600-ish. So, obviously something's going on, right? Some type of resistance. Let's see. Is there anything else that we can look at here? Yeah. Okay, so let's take a look at our volatility for the monthly. We really haven't checked on that in quite a while. And you can see that we are having a little bit of a cross as of, these things aren't very precise for the monthly, but as of the somewhere I would say mid December, and now it's expanding in January. So, this is actually a bearish cross. So it's like we're consolidating sideways and up. This would suggest to me, based upon the monthly, that there's probably a limitation on our move to the upside, okay? And I really want to see this thing expanding to the upside, not a bearish cross, but a bullish cross, sort of like this over here. What we've got going on is one over here. This was our bear market. All of this was basically our bear market. And so I just want to see a flip on this one towards expanding. Not 100% convinced on that. This isn't fully set in stone. This thing moves slow like molasses. But just with this orientation, in my opinion, our upside may have a little bit of a limit on it. And so this thing could meander to the downside, okay? And then when it closes off, then I would think that the move to the upside has a chance of beginning, like the real one. But this could basically take price action on a wild ride, like even as high as like 30,000, 40,000, whatever, right? And then it would perhaps come back down, is what I'm saying. Okay. But I'll pay attention to that later on. That's going to take a long time. Let's look at our weekly, because I did neglect that one. Our weekly is continuing to expand to the upside. So that does tell me that our move to the upside isn't done yet. Okay, so even though the monthly may suggest there's a limitation on it based upon volatility trading, the weekly is saying, well, we're still expanding to the upside. And even if we get a pullback, I'm not done yet. Obviously, if it's a very serious pullback, it could pinch these lines together, and that could be the end of our move. But right now, we're basically at the fullest open part of this volatility that we've been on this entire run. So I don't expect this thing to close easily, barring a catastrophic crash, right? So again, guys, as long as we just have a shallow pullback on the chart, we don't breach this 300 EMA, we don't breach this 9 EMA on the weekly. We do have support down here, but again, like we don't want to get under the 300 on the weekly, okay? Then I would suggest that could perhaps get a nice bounce in that area, and maybe even we create this kind of head and shoulders pattern to the upside, and that would be pretty cool in my mind, as this market squeaks out on the weekly a little bit more of that volatility to the upside before the monthly volatility decides to slam down the ban hammer and turn this ship around. Did I talk too long? Is the 4 hour closing? Should I check on that? No, it's closing in 7.5 minutes. So you guys are going to be able to take a look at that. So again, guys, just for let's see, just for the 4 hour, we'll put those key levels to watch. Let's see if I can just clean this up just a bit. There we go. This one too. Okay, just for our key levels to watch, of course, these are for the 4 hour. We want to hold above 22,667. We're going to gain momentum above 22,937. And ideally we want to be above 23,140, which we're pretty far away from. So this is still kind of a risky territory here. We could even have a spike up here and then lose it all just because we didn't get above the volatility. And then if there's a random volatility spike in the market, it could just send us to the downside, right? But so far, the 4 hour with 5 minutes to go is looking like it's going to hold on by the skin of its teeth. Let's take a look at the 12 hour. Again, your 12 hour setup is going to also need to hold above 22,715. And that one will be closing in actually 4 hours, okay? And we are going to need to be above 22,901 to get a volatility push. So the 12 hour is still at risk, even though the 4 hour looks like it wants to hang on sideways. The 4 hour may actually end up helping the 12 hour, although price action is super sketchy right now. So we'll see how that goes. And then, of course, the daily, which is the only other time frame closing today, is going to be okay anywhere above 22,715 as well, but could have pullbacks as far as 22,350, and I'm not going to be too worried. Prefer to stay above 22,386. Otherwise, again, I think we could start to fill out this inefficient naked candle down here. Guys, gonna wrap it up there. That was your alpha for the day. Stay safe and happy trading.